Good evening, everybody. Sound check. Hi, everybody. Hey, Davis, Carmen. How you doing, Carmen? Good to hear from you by email. Hey, guys. Cliff. Everybody. Boy, a lot of familiar names. Hope everybody is doing well. This is Paul. In case I still, when I email out, I still get people that seem to be just hearing from me. But I've been back around for about 2 months. I took some time off, like a year plus, and then goofed around for a while. And I'm back here with my own company called Discipline Trading Strategies. And I'm out here every couple of weeks doing some hopefully very educational type events, I call them, where we can talk and try and get across some ideas and some concepts. And hopefully you will all enjoy it tonight. I always get excited about doing these. I had fun putting this together tonight. As a matter of fact, I had too much stuff and I had to cut some stuff out because I would never get through with all of this. So we will get right to work here and let's start off here. This is going to last till 6:30. I like to keep it kind of on a timeline so you guys, you get longer than that, it gets a little difficult, and I want to make sure that those of you allowed an hour for it can get out of here in an hour. So it's just kind of a little cartoon because it's kind of the theme of tonight a little bit. It says, are we on the verge of a market crash? And it says verge is defined as between 1 hour and 1 decade. So yes, we're on the verge of a market crash. But it's kind of part of what tonight is about a little bit, the beginning part of it. This is what we're going to look at tonight. We're going to take a look at the market. It's about chart lessons, learning the language of charts. By the way, that's kind of become I think that's become my mantra, the learning the language of charts. That's something I've used as an analogy to me when it comes to understanding technical analysis, that I just love as an analogy. It's really like learning a language. Because the analogy that I like so much, because people always wonder, is this really hard or really easy? Well, it's both. I always give the example that if you were going to take a test against a 6-year-old child, you probably would do well, unless the test was in French and the 6-year-old was from France, because the 6-year-old would know the language of French and you do not. So is French hard for the 6-year-old who grew up in France? No, it's not hard at all. Is it hard for you if you've never had one single minute of instruction in French? Yes, it'd be very hard. It's kind of the same thing. Charts speak a language. And my big theme when I talk to people is that it goes way beyond what I call just the cookie cutter patterns of whether you learn just head and shoulders or whether you've learned different types of buy setups or breakouts. Those are cookie cutter patterns. When you're looking at just a certain limited number of bars in one time frame, they're things that they're cookie cutter. They may work, they may not. They're certainly legit to some extent. But you have to understand the whole language of the pattern that's going on across multiple time frames to really get what we call good odds in your favor. Trading is not about absolutes, it's about odds. And that's what you have to get, is odds in your favor. So I want to start off taking a quick look at how this applies to the market, mostly because it's such a hot topic now, because the market has been up so much for so long and there's been so much talk about it. So I want to just kind of interject some comments about that. Then I want to take a look at some charts. As I go through the day, I often pull out charts and just save them, just to educate, to put them in seminars, to put them in webinars like this. And I have a few that I wanted to look at just to give you some ideas. And I think the goal here, I hope you all understand, is not to try and teach you how to be an expert trader in 1 hour, because that can't be done, of course. And I think you all know that. And even if you came to every one of these I ever did, it would probably take you 10 years to accumulate some of the knowledge. But the point is, in my point of view, is partially to open everyone's eyes to how much there is to actually learn. Yes, I am recording this, guys. I am recording it. And if you haven't been there, if you look at my website, I'm starting to fill it out pretty nice. There's a little page called Free Stuff, and on there are the webinars that I've done in the past, and also the trades of the week. And I am promising I'm going to fill up a section called interesting stuff for new traders, or different educational things. I have a whole backlog of information to put out there that I will get out there just as soon as I can. I may even start this weekend a little bit. So, okay. So I hope you understand the point of this is to just kind of to show you what all there is that can be learned and understood from charts. And it's always simple sometimes when you're here in a webinar in a class because, teachers like me can be real tricky and, we already see the charts and I can go back and justify it. But those of you that know me, I do this every day with you in the trading room, and I've done this forever. And that this is stuff that I do in real time and do ahead of time. So let's take a look and just start to look at a few of these things. Let's start off with the market. I have really a strong point to make about the market in general, and this is where this slide kind of comes in here. About the market crash, whether it's 1 hour or 1 decade from now. We're going to talk about some great calls, not. That means not great calls. What not to look at and what to look at in terms of analyzing the market. Somebody sent me the other day a little blurb from some like a free trader chat. People are sitting around talking somewhere. I don't know where it was. And it wasn't the point of him sending it to me, but I noticed on one of the other lines somebody saying, hey, do you think the market's going higher from here? You guys fill in the blank for me. If you have to ask a random person in a chat room if the market's going higher from here, what? Get you guys typing a little bit so you don't fall asleep on me here. If you have to ask in a random chat room, hey, is the market going? Do you think the market's going higher from here? What's the rest of that sentence? I mean, right? I mean, talk about clutching at straws, right? Yeah, you shouldn't be involved. Hopefully, you're not putting any money in the market whatsoever, other than unless you just are casually investing, like people people do, which is fine. But what a lot of people say sometimes, okay, fine, you're not going to ask some random guy, but how about if I ask the professionals? Let's listen to the real professionals, like on CNBC and those type of places, right? So, ever listen to CNBC? Do you find it helpful? CNBC helpful? But by the way, I want to give you a forewarning here. I do not want to come off as condescending here. Okay, most of you guys know me. I don't mean to be condescending here at all. Okay, I'm not here to just cut other things down. I'm here to try and help you guys that don't already know it, what is pertinent and what's not pertinent, and what everybody's intentions are. There's a real common theme that runs through the first 10 minutes I'm talking here, and that is that there are very few people that are out to help you, and certainly CNBC and various others are not, right? Right, Cliff. Yeah, exactly. I mean, yeah. You look. I like to. I don't mind hearing the news. I mean, I'd like to know what's going on in the world. Personally, to be honest with you, before the market day, I like to not listen to the news at all. I know not all of you would agree with that. I like to go into the market completely blank, not knowing at all what's going on. That helps me quite a bit. But if I do want to know what's going on, I don't want somebody's opinion about what they think is going on. Not even the quote unquote professionals, right? CNBC is in business for one reason and one reason only. That's to make money for themselves, right? They are a subsidiary of GE still, right? Are they still part of GE? Whoever they're part of, but they have to turn a profit, and they turn a profit by holding viewers' attention. Or they're Comcast now? Okay. How do you hold viewers' attention? Well, you have to convince the viewers that in order to understand the market, you have to thoroughly understand X, Y, and Z. And what is X, Y, and Z? Well, for them, X, Y, and Z is the economy, the political situation, the national situation, war, politics, North Korea, right? You know what I'm saying? In other words, they set up a system where they have you believing, and not you, but people, that you have to understand all this stuff to make money in the market, especially the economy. And then they have people on telling you why the market's going higher because the book-to-bill ratio looks good, and why the market's going lower because Yellen's going to do this, and why the market's going higher because PE ratios aren't peaked out yet, and they are peaked out, but we're not counting forward-looking and back. All this list of stuff that goes on forever, so that they can parade endless person after person after person on in front of you, and then when they're all done, there's no conclusion, right? There's no conclusion at all. It's just, okay, end of the day, and here's what everybody had to say. And from that, hopefully, you know what's going on. By the way, CNBC also is always bullish. Now, that's the right way to be, time-wise, most of the time, right? I mean, the market's up more days or months than it's down. And over a long period of time, it historically has been up more points also. But to be bullish during a market crash is pathetic, and that's what they are. Do you know why CNBC is bullish? Somebody give me an answer. Why is CNBC bullish? Is it because they hire top market analysts on a fundamental and technical level that get into the market and determine it's a bullish market? Is that why they? Is that what they do? You know why they're bullish? Honest to God reason? Exactly. Because polls say that they don't want to listen to bearish commentary. People won't listen. You tune in to CNBC and saying, "Oh boy, the market's that's it, market's done." People won't listen anymore. They want to hear, whether they want to hear it or not. They will only tune in if it's bullish news. So they have to keep up the bullish attitude the whole time. Hysterical comments. If you listen to them through a couple of the crashes in '08 and '01, hysterical comments they come out with, absolutely hysterical. I'll give you one great story. Sue Herrera, is that the right name? I think Sue Herrera. After the crash, complete collapse, and she gets on and does this commercial. And they ran this commercial for a week, and they finally pulled the commercial because, well, you'll understand why they pulled it when I tell you what the commercial was. And she said, if you just had your portfolio totally wiped out like I did, let's get together next week on Wednesday and look at stocks to build a new portfolio with. Okay, you just said you're the worst stock picker in the world and you didn't recognize we've been falling for 9 months, and now you want me to join you to pick new stocks? I mean, that's the kind of silly stuff that you hear. So CNBC, not exactly the place. And the point of that is that it starts this whole thing that I want to talk about just a little bit real quickly. Great calls. You don't have to read all this, but this is one of these top analyst guys, Albert Edwards, and this was a year ago, who predicted the collapse of the U.S. market. This is his formal thing: collapse of the market, going to drop 75%, et cetera, et cetera. And by the way, it should be noted out that back in 2010, he called for the S&P to collapse to 450. It didn't, and investors who took his advice then missed out on the biggest move in history. His reasoning: blah blah blah, blah blah blah, financial crisis, global economy. Is his reasoning make sense? His reasoning makes perfect sense. He's a smart guy. He's a lot smarter than I am. Very smart guy. His reasoning makes perfect sense. The only problem was all that reasoning really had nothing to do with where the stock market went the next year or the next 7 years in the case of his first prediction. Another one. A lot of you probably know this guy. This is Harry Dent, who wrote a very good first book. He wrote a great first book a long time ago about how the economy will change due to the baby boomers. Great book. And then he decided to take that and move it into the financial arena and continue to predict. And ever since then, he's been a mess, because he's taken that one belief and he continues to project a bearish market and everything. Now his reasoning, his philosophy is impeccable. It's fantastic. It's pure genius. The only problem is the market has never dropped, despite his intelligent reasoning. He believes the Dow will fall to 10,000 before crashing to 3,000 in 2013. Now, obviously, you can go through and pick out people who have been right and wrong, but it's not really if you're right or wrong. The thing is, what are their motives? There are really, I'm not going to take long on this. I want to fly through this, but there's really 3 reasons people stand up and give commentary of some kind. Okay, 95% of the people are not out there to help you. Okay, I'm out there to help you. I don't have an ulterior motive, but here's the self-serving. One of them is self-serving hyper comments. What do I mean by self-serving hyper comments? I mean people that decide to take a position. Doesn't matter what it is. They want to stand up on a soapbox and say the market is going to crash, blah 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 blah. It's going to go up to 30,000, whatever it is, because as long as they're right, they have a pulpit and they can sell whatever it is. Names that come to mind, Joe Battaglia, I don't say his name, Joe Battaglia, who died a few years ago. But he just stood out to me. If you were around in the late 90s, he was the picture of the bull market. Dow 30,000, never will end, et cetera, et cetera. And he was a hero. until the market stopped, and then he was just gone. And that's what some people do. It's just simply it's just like they used to send out market letters. One company would send out three market letters, and one would be from they'd have subsidiary companies. One would be from sub company A saying the market's going to triple in the next 3 years, and the next company would be company B, the market's going to crash in the next 3 years, and the next one the market's going to go sideways for 3 years. And that way, at the end of a couple of years, they can come back and say, hey, look at what we sent you. We were right. Subscribe to us. So there's just self-serving comments from people who they can be. I'm not saying they all are, but a big motivation is self-serving comments to take a stance, and as long as you're right, you ride the wave on whatever it is that you're selling or giving or doing or whatever it is. And then there's a group of people that are fund managers, and these are on like CNBC all the time, and they'll come on and they say, "Oh, absolutely, still a bullish market. We see investors coming in every day. Blah blah blah." What are their motives? I'm gonna grab a sip of water here. What is the motive of a fund manager being on CNBC? Is he there to help you? Why is a fund manager on there saying that the market's going to go higher or we're going to crash next week? What's he doing? Well, actually, not necessarily to sell his fund. Not necessarily. Matter of fact, he may already be sold out. If he's on there saying market's higher, what do you know about his portfolio? If he's saying the market's higher, we're just at the beginning of a bull market. You know that he still is largely in cash. I'm sorry. You know that he is still he's 100% invested in stocks. His fund is 100% invested because he wants everybody to drive the price up. So the whole world, hey, get in while the getting's good. Time to get in. Anybody that's not in, he wants to get in, so his portfolio can go higher. If he's on there saying, hey, you know what? Big pullback coming, all kinds of problems with the economy and this and that and that. He's looking to help prices come down so that he can then add more because he's not fully invested, right? Yeah, in the first case, he's exiting, exactly. That's their motivation. I mean, they're not really trying to give you advice as to whether or not the market's going higher or not. They're trying to do what they can, if they're on CNBC in a public forum, to keep pumping the market higher if they're fully invested, or to help cause a pullback if they want to get more stocks. That's their only motivation. They're not paid. If you do well because of what they say to you, they're not paid for that, right? Yeah, true, Steve, exactly. And then there's a third category, and these are true calls by good people whose job it is to make those calls, but they're so heavily hedged that they are worthless and can always look back and say, I was right. What do I mean by that? Well, this is the typical thing you see a lot in writing. And again, please understand, I'm not being condescending to anybody, because this next guy I think is a pretty good guy, and he's been a pretty famous guy. But the question I'm trying to get across to you is, how is this type of stuff helping you if your goal is to listen to somebody to decide what to do in the market? Investment legend. This is Jack Bogle. I think that's how you say his name is, Bogle. And he's an old guy now. He's run funds, and I know he's a fairly famous name. I'm not an expert who these people are, but I know he's a fairly famous name. But listen to the wording here. He's worried about President Trump's policies and the massive surge in the stock market. I don't feel super confident in the stock market. By any historical standards, it's pretty fully valued. The 87-year-old founder of Vanguard has told CNN Money. Bogle isn't calling it a bubble, but he thinks stocks are clearly expensive. I don't think it's a bubble. I think it's a significant high valuation, not a bubble. Still, Bogle doesn't advise pulling your money out. It's too difficult to time the market. History has shown those who stay in win. So if you are looking to get in the market right now, and you turn to this world-famous guy, who I don't think is trying to make any money for himself, but what do you get from this? What does this tell you to do? Everyone, what does this tell you to do? Yeah, I don't know. And this is what I mean by it's so heavily hedged. In other words, if the market goes higher the next 6 months, he can look back and say, hey, you know what? I told you that, it's not to take your money out, right? And I told you it's not a bubble yet. You know, I give you every indication to get in the market. I said the magic words, right? And if the market collapses, what's he going to say? He's going to say, well, you know what? I told you we are fully valued. You know, what does that mean to you? Why would you get in if it's fully valued, right? So, and I told you I was very, what's the first word here? I was very, very concerned, worried about Trump's policies, right? So it's that's what I mean. It's kind of an either way, and that's what almost every comment you see is there are very few people who stand up and say, "Hey, right now it's time to get in. Right now it's time to sell a lot. Right now it's time to be flat. Right now it's time to be short." Very few people will do that, right? So I just want you to be careful where you're getting your ideas from, where you're getting your concepts from, because there's not a lot of people out there outside yourself that are really looking out for you. Okay? Yep. Yep. Well, we'll take a look at that, Dave. We'll take a look at that in just a second. Yeah. Yeah, and again, please understand, I'm not at all picking on like this guy. I'm just saying this is a typical comment, and that's what he has to do. It's just a big hedged comment where it's kind of like whatever happens, he said the right thing. So, anyways, one last thing on this topic, and we'll look at some actual charts here. But I want you to remember this also in huge bull markets. Oh, let me tell you something before you even read this, because a lot of you may not even know this. My natural flaw as a trader investor is that I am naturally and instinctively I want to be what, bullish or bearish for me personally. Some of you know for sure. Take a guess. Maybe hard for some of you because yeah, I am naturally I just want to be bearish because things fall faster. I like being bearish better. It's I just am more at home being bearish, and I've been bullish for 10 years now. So I'm just saying when I say bullish, it's not because I'm one of these perma bulls that just, you know, oh, this is be bullish. I mean, I have to look and say, man, I can't help it. We're just going higher. So I want you to keep this in mind. In huge bull markets, the bears always sound smarter than the bulls. You hear a debate on CNBC, right, guys? You've heard the debates, right? The bears always sound smarter. They have all the facts. True, everybody? They have all the facts in their back pocket, the economy and PE ratios and this and that, and they can tell you a million reasons why the market's at a top. The bears always have all the facts on their side. Everything is clearly overvalued, and there is always economic policy that breathes impending doom on the market, correct? Right, guys? Do you hear that? Like, practically every day you hear that, right? Every single day, whether it's anything from political to Korea to the gray one, interest rates are going up. You know the interest rates going up historically are bullish for the market over the last 20 years, and not a single person I know acknowledges that. Interest rates going up has coincided with market increases, not decreases, for a long time, net. And yet we still listen to CNBC say, oh no, God no, we're going to have a rate increase. There goes the market. Doesn't happen. Also, in huge bull markets, prices keep going up and the bears are broke. The bears have everything on their side except for one thing. Prices. Prices keep going up despite all of their great reasoning. After huge bull markets, the bears are broke because they gave up. But the bears get to say, I told you so, we were right. We were just 8 years early. And that is the case sometimes. It's not even an exaggeration. There are a lot of calls out there from people calling for a crash 8 years ago. 8 years ago, you know. You would have only missed the market quadrupling since '09. To take any last even concepts away from you about trying to figure out the market based on economy or anything else, I want you to just keep this in mind. By many measurements, by many standards, um, the 8 years that we went through from 2008 2016, by many standards, objectively measured, are some could perhaps be called some of the worst economic conditions we've had in terms of GDP growth, and you can point out some other things, but I mean, generally speaking, the majority of that time it was just a dismal U.S. economy going on. It was the first time in history we went 8 years without at least a 3% GDP one year. All kinds of stuff that you could pull out about how poor things were, and yet the stock market quadrupled. Now I understand we started that time from a crash, but nevertheless, you know, the point is if you're trying to time what you do with economic concepts, you're always 180 reversed. What happens is that when the market crashes, nobody wants anything to do with it. And then on the way up, all the scared people are staying out. And what's going to happen is that in the near future, we're going to get good news. Yeah, I know. Well, that too. I mean, that's another thing, Peter. I mean, you're right. I mean, I could sit here and tell you absolutely positively we're going to have a huge crash. We're going to have inflation. Inflation up the wazoo. Guaranteed. And that's going to happen somewhere between next Thursday and the year 2030. And that's about all I know. And that's all I would guess. Right? And that's all we do know. So to sit out of a bull market that quadrupled because you don't like economic policy or you don't like this or you don't like that, that's why we do what we do and follow charts, right? That's why we follow charts. So anyways, you get the idea. Yes, the market will crash. I guarantee it. The question is when. That's always the question, right? This may sound crazy, but instead of looking at what should happen, instead of looking at what might happen, let's look at what is happening. And, you know, I heard this statement or something similar probably like, you know, when I started 17 years ago, 18 years ago, whatever it is. And the comment never really sunk in with me for a decade because it just seems so simple. But it is. I mean, it's just absolutely what it is. I mean, there's no need to talk about anything else when this is what we're looking at. When you could, here's what I always thought, guys. What I'd like to invent something where we could somehow monitor whether there are more people buying stocks or selling them. In other words, if there's some device we had where we could take buyers and factor out sellers and then net look at whether or not there was buying or selling. If there's some way that we could do that so that we could actually tell if people are really selling or just saying they're going to sell, that would be an invention that would probably sell. Oh, look, there it is. A chart. What do you know? This is a monthly chart of the SPY. This is the election time. That, you know, that blob right there. That's the election time. And the impending stuff that happened around there. But aside from that area in there, and by the way, while that looks like a little bit of a pullback, I mean, look where you came from. You came from 120 to 200 and then pulled back to 180. It's not exactly a devastating thing. And this area right in here, we call that a power trend. And the reason it's called a power trend is because just every bar, you could almost draw a line on the slightly higher lows, the slightly higher highs, no deviations, no devastations, no pullbacks, just grinding higher. And that's been going on for, you know, well, at least since before 2017 started. And if you want to take a look at the weekly chart, this is what that nice weekly chart looks like. The weekly chart gives you a little more detail, so you see the ups and downs a little more. But this is the pattern of just pure buying. There's no pointer. Oh, yeah. Where'd the pointer go? Oh, hang on. Sorry. I have more than a pointer. I have a beautiful red dot. I'm sorry, I've not been using that. Yeah, here we go. Thanks, guys. Sorry. I just didn't click on it. I can see it. You just couldn't see it. You see it now, right? Yeah, you can see I'm logged in as a user here. I can see the red dot. And when you have this type of thing going on, I mean, these moving averages, it's a 20, 40, and a 200. Less. Not that matters much, though. I mean, to be honest with you, don't really care what you use. I wouldn't even care if you didn't use them. Some people, I do like them on there. I think they're a good reference point, but they're not. They don't do what a lot of people think they do. But when you have a chart like this, there's no need to talk about anything. There's no need to talk about who's president or what economic policy is or any of the above, because we have that. Now, say fine, that's what's been going on. But can you really take this chart and can you say, hey, let's buy, right? Hey, Tony, how you doing? 2015 and 16 monthly chart stage 3. Let me take a look. Well, again, Tony, that's the big debate always when you pause is what's it going to be? Obviously, it turned out to be a pause. And whenever you stop and go sideways, it's always the question. Are you pausing to go higher? Are you putting in a reversal type base, such as what we call the stage 3? And it's very hard to tell because it never even really based, right? I mean, you look at what it consists of a base, we would have had to stop here and roll over to really be a base of any kind. It just kept going. So this is just, it's just a hiccup. It's just an uptrending pattern that pulled back a couple times, and these are more difficult patterns to try and live through because they're harder to play because you get some volatility and you're not holding to prior patterns as much as you were. But nevertheless, you have to. There's nothing there that indicated that was a stage three, um, other than the fact that it pulled back more than the usual amount during that time. But this is what I mean about kind of learning the language of charts, as I like to say, because at a first glance, people that learn and understand this stage three talk and what that means, you may look at that and say, "Oh, this stage three," but you have to incorporate a lot of things into your concepts. Like you have to incorporate this move. See, that's part of what happens here, and there's a big difference whether or not that happened after that type of a power trend move, or if it happened way down here somewhere, right? Um, Well, you can put the 8 on some intraday charts. I mean, I have the 20 and the 200 and all the time frames. Sometimes just the 20 if the 200 gets in the way. It depends what I'm using it for. But oops. So continuing on here. So can you step up in a chart like this? Can you step up all of a sudden and say, hey, it's time to buy that, even as a swing trade, even as a core trade? It's not too late to get into this. And the answer is yeah, you can. I mean, the charts don't always give you the opportunity to do what you want to do. Sometimes they take off, they left without you, and you don't have a great vehicle to get in. But a lot of times they just reach out and give you an opportunity. And this happened about 2 weeks ago. In fact, it was 2 weeks ago yesterday this happened. And I just want you to see the difference you have with an understanding of technical analysis. This is in the letter. I'm just going to take 1 minute on this because I actually put an email out about this. So you might have saw this, but this is just went out. It was the 27th, so it was 2 weeks ago yesterday, and all of a sudden it just stopped and said, and this was not said like every day. This is not said. It said right here that above 3, this is the possible swing move if it closes strong, and this is a 15-minute chart. And this is the daily chart at the time, simply saying that this is a swing move if we close above 3, and then the next day went on to say that that close above 3 can be used as a not only a swing but a core buying opportunity because we ought to go right through and make a higher high. In other words, predicting that we would go through this daily chart up here, which a lot of people under simple technical analysis would say that's a very difficult top to go through because it's a double top, a triple top, it's congested, it's square, it's blah, blah, blah. But no, none of that is really true because of what happened over here. This move up here cleaned out all the resistances over here, and the only resistance that remained was just the resistance from this last move up. Nobody got in trouble, and once we got underway to move higher across here was a piece of cake. And you can see that's exactly what happened. I mean, the last 9-10 days. Here's the move from where that letter came out to here. And it was called a core entry opportunity. The market is not done yet. It's not done yet. Yeah, well, the Qs hit an all-time high 5 days ago, right? Didn't they, Dave? I mean, this was the all-time high right here. And then every day they make new highs. So yeah, every day you make a new high. Once your all-time highs, they're always new all-time highs, right? But this is the big one here: is that this day right here, where the market approached the prior highs and said, no, there's nothing here. I'm just going higher. Period. Bam. So what happens from here? I already made the call in the letter that we're going to see probably 2 weeks of just this grinding pattern. Grinding day after day, little bars, just grinding higher until it doesn't. And naturally, you have to keep analyzing the chart day after day after day. At the moment, I still say there's nothing to say that we're ending this market. Now, if you tune out and don't listen to me for 3 weeks, I mean, something could happen in 3 weeks. If we reach a top through acceleration, which is how the tops were formed in 2001 and in 2008, those are easy piece of cake tops to find. Those tops are like, man, just live for it. If we transition, they're more difficult to nail. That's something that would take several weeks to really be able to say, hey, time to really start unloading. Remember, there's 3 things that you need to worry about in a bull market like this, and that is number 1, when to unload long-term long positions, things you've been holding for years. When do you start selling those? That's number 1. Number 2 is well, I'm sorry. Number one is, do you still continue to buy long-term positions? Number two is, when do you start selling what you have? And number three is, do you ever start shorting? Do you actually start shorting long-term positions? And those all don't necessarily happen at once. Um, my opinion, my advice is that it's not really good this late in a bull market. And I'm saying late. We don't know how long it will go on, but certainly we're not in the beginning of a bull market. I don't think it makes sense necessarily to trail stop your positions. And let me show you why. Because when you start trail stopping, for example, if you trail stop right now, you would be using a stop like way down here. You'd be giving back 10%. You'd be giving back a lot, right? So what I think makes sense is, and what I recommended on this move, is that people should be selling on this move up over this week, over the next 2 weeks, is divesting yourself of, it's up to you. I don't, it depends how long you've been in and what you're doing, but I would say divesting yourself of 2/3 to 3/4 of long-term positions, so that you're not caught, because if one day all of a sudden we gap down a huge amount because something happens, then you're stuck, and then you don't know what to do. Are we coming back? Or we keep falling? So I think you sell incrementally on the way up is the only intelligent way to handle this. I think the call I just made to be core long 2 weeks ago is the last core long call. Personally, I told everybody I'm only going to handle hit and run swing trading for the rest of the bull market, whatever that is, whether it's 2 months or 2 years, meaning just in and out 2-3 days at a time. And I'm going to talk about that toward the end of this a little bit. And shorting you do not do until the chart pattern says we're in a downtrend. And that's something that, people who are with me, I'll let you know, and we're probably a long ways from that happening. There's two ways it could happen, like I said, through actually transitioning, which would take several weeks, or through an accelerated move, which could happen in 2 or 3 weeks. I don't think it will, but it could. And that's what happened in 2001, a little bit in 2008. Okay? So there's some stuff in the market, big picture, long term, yada, yada, yada. And yes, it's very doable when you really understand the language of charts. Okay? No one was saying get it out of the top later. Right. Right, exactly, Dave. You said you phrased it better than I did. I could have just shut up for that last 5 minutes and just let you type that, because you're exactly right. Because sometimes the top is, oh, that was the top behind me, right? And now I'm falling already. You don't have to be short coming off the top, but you do have to be protecting your long-term positions. I heard so many stories of people that took the whole move up in the 90s and gave 100% back. I sat and had lunch with a guy who bought Yahoo, and I forget the numbers. He bought it at 12. He took it up to 250. Forgive me if the numbers are wrong. I don't remember the numbers, but that's about right. Took it from 12 to 250. And guess what he sold it at? 12. You don't want to do that, folks. There will be a crash. There will be a bear market. It's absolutely guaranteed. It's just a matter of when's it going to be. And that's what we tell by looking at charts, not by listening to anything else. So, with that, what I thought I would do, oh man, yeah. And I have to tell you, there are probably some people, give me a 1 if you have, but there's some people that are probably listening to me now that have followed me for more than 10 years, and probably some people that may have been around back 18 years ago. If you were, give me a hello. But okay, and reason, hey guys, so hey Steve, I just emailed you, yeah. Thanks for catching that, by the way. So I can say boldly, right? Not like I'm saying this in secret, but in 2001, I was in a room and I was pounding the table short the entire time. Is that correct, everybody? From the top, right, at NASDAQ 5,000. It was what it was then, correct? I was pounding it short. I was just saying, do not be long, do not buy pullbacks, right? And I said we're going to go to 2,000. We actually went to 1,600. Correct? Were you anybody around back then? Thank you. So I'm just saying this is stuff that you can do. Well, you make me feel really bad now, Trader T. But yeah, and the same in 2008. I mean, the same in 2008. And in 2008, that was a very nice bottom that formed. And getting long off the bottom again, it's not that hard. You have to have some patience, but yeah, the tulip. Yeah, exactly. The tulip bubble. You remember me arguing with the guy in the room? Cisco came down to 35, and he said, "Paul, I'm buying a ton of Cisco." And I sit there and I argued with this guy. I said, "Look, we are in a bear market. We are falling. You do not buy dips. You do not buy dips. Wait for a Cisco to rally and short it." He said, and I said, "What if it goes to 30?" He said, "I'm going to buy more." I said, "What if it goes to 25?" He says, "I'm going to double my position." Well, Cisco went to 8, I believe, during that decline. Didn't hear from the guy again. Yeah, didn't hear from the guy. Um, but you gotta just simply follow what the charts tell you. They tell you what's going on. They tell you when buyers outnumber the sellers, it cannot be hidden. Nobody can lie about it. Nobody can do anything about it. It just has to show up on a chart. It does. All right. So let's. What I wanted to do here was I thought I would do just a little. I don't know, educational thing here. Um, Again, I'm not I'm not starting on day one. I'm going to do a 36-hour seminar with you about technical analysis. What I want to do is just show you some examples of things that I think are just common little tools. I see charts sometimes and I say, hey, there's a lesson to be learned. That's what I'm saying. There's a lesson to be learned. And a lot of you know this stuff, right? A lot of you know this stuff very well. It's a good review. Some of you, uh, my purpose in this is for some of you to say, hey, you know what? I'm telling you honestly, I mean, most people won't talk this frankly. But I offer, I offer, you notice I don't talk much about what I offer. I offer a trading room, a letter, and 3 seminars that I think are everything you need to know. And my purpose, I mean, besides helping people, is I'd like to convince you to take a seminar. And how do I do that? Well, I like to convince you by saying, hey, look what there is to learn, right? Look at what there is to learn here. Look at the knowledge that can be had. It's a lot more than people pick up when they just get that, $99 DVD about technical analysis, because that just gets you in trouble. Anybody want to vouch for that? Anybody out there, give me a one. Anybody want to vouch for the fact that the $100 crash course in technical analysis teaches you just barely enough to get in a lot of trouble? You want to vouch for that? I'm not saying you're in that situation now, but over the years you learned that, right? It's just not what it is. And this is where people get a bad rap about technical analysis, because they say, oh, it didn't work. It didn't work. I went and I bought support and it failed. And I'm looking at it, well, that's not support. Oh, yes, it is. The DVD said that was support. No, it's not support, right? Yeah, yeah. And guys, and if you think I'm BSing you, go read my website. Cliff, did you read my website? Read my website homepage down at the bottom. Um, Down at the bottom on the website, um, there's a spot called, what's it called? A warning. It says warning. And you want some honesty from a person in the market 18 years? Read that. Okay? Yeah. Colonel, do me a favor. Are you going to hang around to the end? I don't want to get into a selling thing here. I don't want to do that. I want to finish teaching, and then like at 6:30, I'll hang around, and okay, then I'll answer your questions about all this stuff, because I don't want the other people here to be like, oh, we're talking about junk. So let's go through some of these charts and just see what there is. And these are not this is not super high tech. This is just, let's take a look what's here. And here's the question on this one, right here. And I blanked out the chart to the right, and I'll show you what chart it is when we're done, so you can go look at the chart yourself. Breakout. Now here's a daily chart, weekly chart. Do we like buying this breakout right here? And I'm calling this a breakout because we consolidated. We came up above a red bar. That's bullish. We consolidated sideways all this time. We had a green bar break across the high, and then we're starting to follow through. Do we like this? Yes or no? Do we like it long? Yes or no? Everybody who wants to participate, give me a comment, yes or no, and or why you like or don't like it. I'm gonna give you like a minute on each one of these. I'm gonna give you like a full minute to look and digest it, and if you want to comment, great. If you don't want to comment, great. And I'm not here to, again, I'm not here to. Nobody knows who you people are, so it's not like I'm not here to belittle somebody. I'm just here to share some wisdom, stuff I did wrong in the past, and trying to show you again that just some of the simple stuff you learn sometimes isn't enough to understand, right? Want to see it come back and bounce off. Okay, those are good comments. No follow through. Okay, all right. Well, I think though the main point I wanted to get across, though, only a couple of even mentioned. Okay. Here's my thing on this. I talk about, and by the way, this applies to any time frames you want. This could be a 5 minute chart over here, and this could be an hourly chart. As a matter of fact, the last 2 days ago in the market, I brought this up. And here's one of the concepts I just want to get across to you is that I'm going to use an arrow just because it draws straight for me. Is that there's like this, what I call a sweet spot kind of, you know, here's your weekly chart, you know, and yeah, it's in an uptrend, yes. But do you see how it's kind of at the top half, in the very, very top part of that range that you're in, right? No, no, true, David, but this is a daily chart. I'm saying you could use the same relationship between the 5 minute chart and an hourly chart. But what we have here is the daily chart and the weekly chart. And here we do, the daily chart does care about the weekly chart. You're right. Intraday play, I could care less about a weekly chart. Don't even have it on the screen. So I would not like this setup. I would not be considering a long play on the daily chart because the weekly chart is not in the sweet spot. Okay? Right? It's in the top of the channel, so to speak. I don't want to get all caught up about channels because they're not really that relevant. But if this daily chart were right here on the weekly chart, I would like it a lot better. But do you see what I'm saying? Right. Well, that's the point. Some of you get this, very simple, but that's the point. And this will cause this to have problems. And this is what, to me, one of the more common things. It's called one of the basic tenets of multiple time frame analysis is to be looking at all the time frames and seeing, you know, where is it likely that buyers are going to pile into this, or are these buyers going to cause sellers to come in and start selling, right? Right. And you have here again, somebody pointed out a very good point that we have this acceleration. You know, this is what I like moving averages for, by the way. They're not support, but you have this acceleration is pulling the moving averages apart, and then you have the greatest distance ever between price and the top moving average. Doesn't even matter what it is, right? So that acceleration on the weekly chart is telling me that daily breakouts are going to have a more difficult time. Just that simple. Does that make sense? Does that make sense, everybody? That's the little lesson. Now, again, you know, I'm sure you could go find a chart for me where that didn't necessarily work. I'm not telling you you can't find a chart that didn't hold true. It's about odds, and I'm telling you that the odds are that if you're going to play acceleration on the weekly chart on a daily breakout, you're going to fail more often than not. And that's why a lot of traders will look and say, oh, you know, breakout failure, breakouts don't work, technical analysis doesn't work. Well, you can't take a breakout on something that is accelerating on the higher time frame, right? It's not likely going to work because you get that little pop, it doesn't follow through, and then sellers say time to happen. And you know what? If you go look, I'm sure somebody would tell me, this is Apple, by the way, I'm sure somebody's going to tell me there was news this day, okay? And I'm going to tell you, I don't care. Sure, news was the excuse that was used for traders who needed to take profits to take profits. Does that make sense, everybody? In other words, if that same news would have come out down here on Apple, see where I'm pointing? It would not have affected the stock like that, guarantee you. It would have been already built into the price at that point, right? Up here on the weekly chart, that news, with acceleration like that, neutral news is bad news. And bad news is really bad news because people are itching to take profits and any excuse works. So it's not really the news that does it. It's the chart pattern that allows the news to carry forward what you think the news really is. That's why news works sometimes and sometimes it doesn't. All right, let's look at the next one. I forgot what this next one is even. Okay. Question here is, we have, and again, this is a little more of an advanced look at a chart. We made a new low. We put in a little sell setup here. We blew through it with a green bar, kind of making that sell setup fail. Red bar comes in and we blow through it again a second time. Is this time to be long this stock? Yes or no? And again, there's a real, not giving you the weekly on this one. I agree with you, Hyper. I agree with you. You should have the weekly to make this decision. For my educational purposes right now, I have a point to make here that will supersede looking at the weekly chart. Actually, it doesn't. You're right. You should look at the weekly. You're going to have to assume for me right now the weekly is not something that you are going to love on this one at all. Right. And you guys are hitting it on the nail here. Exactly. Now, this pattern here, if I could put that at a different spot on the chart, in other words, if prices were uptrending on the daily and they got kind of extended and then tried to make a higher high, rolled over, and then blew through those red bars, I'd be very bullish. In other words, this could be an entry signal on prices that stalled because of a prior extended rally if you're in a bigger uptrend of some kind, right? But you guys all hit the nail on the head, is you never ever, you don't have a right to be playing the break of a downtrend as a bullish event. In other words, the break of a downtrend, even if that is the break of a downtrend, it's not an uptrend. And there's a big difference. And when downtrends break, you know, answer this question for me. When downtrends break, the vast majority of the time, what comes next? When a downtrend breaks, however you define it, what usually happens next? Excellent, Reg. The downtrend resumes. It just keeps going. That's what happens most of the time. Now, I know a lot of us are looking for those moments in time where it reverses for some reason. Now, what would give me a right to play this long? And some of you hit it already. If the weekly chart were in a perfect uptrend, and this drop on the daily chart was this drop on the weekly chart, do you see what I'm doing there? That would give me the right, exactly, Peter, we're still playing whack-a-mole here. That would give me the right, possibly, to play that because I have a reason to be looking for the downtrend to break because I'm playing a bigger time frame uptrend. So again, looking at those time frames, but without any other information, again, this is just something I see people do a lot, is to want to pick on extended stocks. There's something mentally about human beings that we want to be the hero. We want to short a stock at the high and get a stock on the low. And there are ways to do that when the stock lets you do it, when the stock raises its hand and tells you it's doing it. But most of the time they don't. And people try to take the first break of a downtrend and go along with it, and they usually get slapped because downtrends continue until they don't, right? Yeah, and like I think you said too, Colonel, it's hard to even get more detail without seeing all the other charts. But that's the point I wanted to make there because it's a big one. Don't do that. Don't do that. We have another one coming up with both the daily and the weekly chart on. Hope you guys don't mind. I am going to be about 5 minutes long here. I hope I knew I had too much stuff in here. So that was GE, by the way, and you know initially popped a little, but then just continues right on downhill. All right. So what do we think here? We have a stock that kind of a weird pattern. In that it was in some kind of a pretty strong, let me get my red ball, it was in a pretty strong downtrend, kind of weird consolidation here, and then drops, and then comes back 100% of the way to the prior high, rolls over, and then we have a green bar popping up. Should we be getting excited about this? Should we be getting bullish about this? Okay, good answers. I mean, you guys good. I mean, you changed your tone a little bit, which was good. Somebody said it kind of maybe. First of all, here's first rule. And again, maybe this is a little personal, but I would never take that move out of a downtrend and play it higher on the next bar. I would never do that. But this pattern is telling me that we're setting a bottom, right? It is telling me we're setting a bottom, and it's something I'll put on a watch list and look for future events that would tell me this bottom is confirmed and to move higher. Now, what if I'm wrong? What if this does turn out to be the move and it just flies higher from there. What if that happens? Yeah, yeah, right, Marty. Yeah, yeah, right. Well, then I just missed it. I mean, learn to accept that. I mean, stuff happens all the time, right? There's hundreds, if not thousands, of stocks to look at, and I'm going to miss a ton of stuff all the time, every day. It's not a matter of. It's not like my life or my career depended on trading this stock high. It depends on finding the right stock, and that's not where I'm going to play it. But I pulled this up because I thought it got interesting afterwards. Because if we click this up, this is Conagra, and this is what happens. This is what I want to see. And by the way, this is very recent, so this is ongoing, and this is one you can kind of start looking at as a long-term thing. And I wouldn't necessarily get into long-term yet, but I mean, we're getting to the point here. Now we make a little bit of a higher low, we consolidate, we got a wide bar coming up. Yeah, CAG, right. So something I'm gonna kind of look at on a long-term picture. And again, I kind of forget what the weekly chart was on this one, but yeah, I just wanted to show how something transitions, and that you don't try to be the hero and get it necessarily day one. If that flies on the day, you let it go. I wouldn't even try to play it on the first pullback, because it's not told me enough yet. This is the first time it's interesting. I mean, if you were real aggressive, you play something like this over the top of that base and stop under the bottom. The next day it starts to move higher. That might even be current. Is that through today? That might even be right through today. I think it is, as a matter of fact. And then I have one more chart here to look at, and this is, I think, the most interesting to me. Here we're down to an intraday pattern. Paul, over the mid-August, mid-September, isn't that an uptrend? Mid-August, and the last chart, Reg, on the Canary. Mid-August to mid-September, isn't that? On the daily chart, no, absolutely not. No. Now, did an uptrend develop on smaller time frames in here? Absolutely. But the daily chart never went on an uptrend, no. Matter of fact, it never broke its downtrend. I mean, everybody can use different language, but I mean, this is still right to here. This is still a downtrend. Period. It's not a nice downtrend. It's not one I want to play anymore. It's fading, but it's still a downtrend. And even here, even as this becomes a pivot, all you've done to me is you've challenged the downtrend. You haven't even broken the downtrend yet. Even here, you haven't broken it. You're certainly not in an uptrend, right? On an hourly chart, you certainly went into an uptrend during September here, without question. And all the intraday time frames, a lot of them were in uptrends for a good part of the time as well. Okay. So here is, now we're down to, and this is very recent. Here's a 1-minute chart and a 60-minute chart. Again, like I said, the relationship between the time frames can be whatever you want it to be. The question is right here: is this any reason to be thinking bullish right here with this much of a chart that you see? Now here you do have the 1 minute, here's the hourly, and the star is exactly where we are. So that's, this is what, at 10 o'clock on this day. So you're on the second hourly bar. That first bar is a half hour. That's where we are on the hourly chart. Here's the 1 minute chart. Is there a reason to be getting bullish here? Yes, no, how much so? Um, we're getting some different answers in this one. I kind of expected that. And actually, I'm going to have a very firm opinion on this one, just so you know. Now, somebody's saying that it gapped up and did a bear 180 back down to the bottom. That's true, it did. And see, this is again where I'm going to pull that wording out about the language of charts. It's not always quite as simple as, oh, a bear 180, that's bearish. You got to look why it did it. This stock was up a lot from here to here. It consolidated. It moved up again and held. The gap up simply was a profit-taking sell. I mean, nobody got hurt on this. In other words, there's nobody in pain because of this red bar this day, right? And we have 2 reference points here already from the prior day. One more time to consolidate. Okay. So here I'm probably going to shock you, and this is a little bit more of an advanced chart. But I not only like this long, this to me is a standard pattern to me that is so good. This exact chart is in one of my manuals. It's not this chart because this happened 2 days ago. but I have this exact chart in one of my manuals. And to me, this is my bread and butter play. This is something I love doing. Right, Dave. Yeah, get in when others are getting out. Yeah, boy, I love your comment because I've had a dozen people email me to say that the biggest thing they learned from me was that you get in on when people are scared on a small time frame, you get in because of the big time frame, and that's exactly what's happening here. I love this long. Now, I'm not saying this because it happened yesterday and it made $1 million. It didn't go very far. So understand, I'm not saying it because, oh, it's just hindsight. It didn't go far at all. But I will take this pattern. And now I didn't play this because I didn't see it. It was after the fact this day. But this to me is one of the best patterns. This is what I look to do. This is my primary thing I like to do every day. A tier one gap is my favorite thing. We're not seeing a lot of those. And this is my favorite thing other than that is to find daily and hourly charts that have firm support levels and play the morning puke into that level. Now this here is three different strategies coming together in a sense. It's an hourly or 15-minute buy setup on major support, and yes, we can call that major support today. And it's being confirmed by a break to a new low, right? That's when I want to go long sometimes because it then bull 180'd around. In other words, everybody's saying, okay, here we are, we're holding. Oh, we're breaking to a new low. How does everybody feel about that? Are you scared? Everybody says no. I just use this to suck up all the stock I can find, and then we consolidate. So after the bull move back up again, nobody wants to sell. It just sits there, right? Now a 1 minute chart bull 180. Who cares? You're saying. I agree. The reason I care is because it's coming off of this time frame here. You're hitting the support level on this chart. So this, to me, that is just the ultimate perfect. It's really three strategies in one, and I absolutely love it. And sometimes I'll even grab it from here. Now it went a little higher this day, and again, I didn't actually play this day. I just saw it and I was like, wow, this is like literally a picture right out of one of the manuals, one of the chart manuals I have. And that's just pulling a whole lot of things together, and I love that. That's one of the most reliable things out there. The issue is finding it. You just can't find it every day, all the time when you want to find it. Okay, and actually, in some cases, as some of you know from the second class I teach, I will literally enter as this turns green, and doing that is probably the most reliable entry you'll ever have when you do it right, when you do it properly. So I hope you enjoyed the charts and stuff we looked at here today. It was, something that you found useful to some extent. Oh, we're not done. Oh my gosh, I'm not done. I'm sorry. There's no section about swing trading. I got 2 slides. What, Carmen? I'm sorry. We're going to be 7 minutes late. Sorry about that. This is just 2 slides, but I want to bring and again, this is kind of just a little add-on I threw in here. The worst way to swing trade. The worst way to swing trade is probably the way most of you are taught, is by using the daily chart with daily bars. And it may be the only way you have to swing trade. Because if you're at work all day, if you work 8 to 5, you don't have a choice. You have to say, okay, here's my entry based on something, blah, 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 blah. But if you're with the market during the day, or even if you're with the market for an hour, oh, thanks, Carmen. Even if you're with the market the first hour of the day, you should never swing trade from the daily chart. Why not from the daily chart? Well, here's why. Number one, the risk to reward is tough because you're using big bars. Number two, you have to get that chart going to a new high to make your money. And number three, those of you that swing trade, give me a number one. If you just want to kick yourself in the head because you stop out on the morning of day 2 so many times and yet the trade's successful. Is that something you notice, everybody? You enter on Monday, Tuesday morning, the first half hour of the day you stop out, but then it goes on to be a great trade. True? Anybody who swing trades on a daily chart is going to answer true to that because it happens so often. So how do you do this if you are with the market every day? Well, I have an example, and actually I don't have to go through this a lot. I used this recently. I'm going to be doing this a little bit more the next, well, indefinitely, as long as the bull uptrend continues. I'm going to be doing this more and more. But I did this a week ago with Adobe. And again, using the daily chart, I don't even know what numbers you would use. The risk reward here, I probably would have gotten 1.5 hours or something out of this. But what I did on this day was on this gap up in here, I came in the strategy was buying that hourly buy setup. It's not really what I ended up doing, but theoretically, that's the structure in my mind. Is that we're coming off a daily support level, we gap up, we have this reversal on the hourly chart, we gap up, there's pure strength, we hold the first morning on the way down. So in the structure in my head is daily chart long, bullish daily, hourly chart buy setup after the gap up, right? So then I look for the entry, and then I'm coming down on that same morning. This is that's the morning it happened. There's the gap up. So this pullback I'm buying. Now I'm getting in early because I'm using a special way to enter where I'm actually getting in very close to the low and giving it room. I went in here with a 40-cent stop, and on this tail right here I adjusted the stop 10 cents. That's something I'll do in my trading, that knowing exactly when and how to do that is part of the advanced management concepts I teach, makes absolutely at least triple the money that it loses for me. And here's an example, because somebody else might have stopped out on this. You would have lost a full R, risking whatever it was you're playing, $500, $1,000, whatever it is. I did not. I hung on. It rallied nice so that by the end of the day, and then what I do is, and listen to the beauty of this, you take a full day trading lot at a 40-cent stop, whatever that is for you, 1,000 shares, $400 risk, right? You take the full lot. You hold it to close, and along the way or at close, you then sell whatever you don't want to hold as a swing trade based on your swing trading rules, because you're probably not going to hold a full lot at a 40-cent stop for a stock like Adobe, right? So you pair, so then you sell at a profit as a day trade what you don't want to hold as a swing trade, and the swing trade is already profitable. Now the next morning, you run with no stop. Now when I say no stop, I mean no chart stop. You still have to have a personal money management threshold where you say, but you've already sold half for profit. So I let it pivot the first 30 minutes the next day, reset the stop to that low and let it go. And then I hold, and I sold right here. So the swing part of that was about 7.5 R units being held almost risk-free. You're always at risk in a swing trade. It can always gap against you. But compared to doing it the other way around, you'd never make that money on that, and it would be much riskier the entire time. And you would have stopped out twice, not knowing what you're doing, right? I get goosebumps talking about this because I can't even begin to explain it properly enough to get it across. And again, I'm giving you stuff, you can try it, do what you want, but you really need to understand all the details of this and how it works to do it properly, or you just end up wasting money. But the concept, take it, use it. I may never see some of you again. I may not be in a room, you may not come to a seminar I do. If I don't, it's good information. You're all smart people, take it, use it. But there are just hundreds of little things like this I like to teach. That's what my seminars are all about. So now I think I'm done. I am done. So I'm sorry I ran 7 minutes late. I didn't want to do that to you, but you could have left if you wanted to. Anybody have any questions? Anything you want me to go over? Let's say we're officially done. We're officially done. I'll hang around for any questions you have about charts, and I will also then just quickly run through any questions that you have, or I'll just quickly tell you about what I do with seminars, trading room. Somebody started to ask, maybe whoever asked me in a minute, you could ask me what you asked me before about the seminars. And I will, and again, when I send these around, those of you that are here, you're a free member. You're members. You don't have to sign up every time if you don't want to. I see a lot of you signing up multiple times. If you're here, you're a free member. You get invited to all of these automatically. You get the weekly market summary. You got a trial the first week of the letter, and I may have some events for you in the future too for the free members. What I will do is to everybody who's on an email list, I'll send to them to say, hey, become a free member so that you can attend this next event. You don't need to sign up for that again. You will get the email automatically. It doesn't matter if you do. It doesn't hurt. But so I don't see any questions. Okay. Yeah. Okay. So Colonel, here's what it is. I've taken everything. Okay, Colonel. So you know me from Pristine, right? So let me just talk Pristine and what it was. The original TPM1 was written by Oliver, great course. Okay. Over the last 8 years of Pristine, I revised it multiple times to get it kind of close to what it was. I was, however, working at a company. It was not my company. I had limited say-so on what would happen. I revised it to some extent, and I also wrote 2 classes. Well, I wrote several classes, but I wrote Advanced Management Strategies, Advanced Gap Strategies, this stuff that I was taught at Pristine. So what I have done, I have taken everything I think you need to know, and I've split it into 3 classes: Mastering Technical Analysis, Mastering Advanced Tactics, and Mastering Gaps. Okay? So I have not recreated new technical concepts, right? They've existed. I've reorganized them. I added a lot of information. I took out stuff that I thought was like what I call filler material. There's a lot of stuff that is nice to know and it's impressive to some extent, but you just don't use it. You know what I mean, Colonel? Like after you, if you take these 3 classes from me, after you take them, I could probably talk to you another 3 days about other stuff, but you never really use it. Now, if you took classes with me, Colonel, if you took certain classes with me, you could be qualified to get in on what I call a retake program. I'm not going to make you, I'm really here to try and help people. And if you took classes, and you have to email me with what you took, and I can verify it. And if you took classes that I feel cover, you get a retake rate, which is $250 per class or $500 for all 3 classes. So it's almost free. And I have to charge that because you're still going to be taking retakes, getting manuals, and having trouble getting out of the room and asking questions and blah, blah, blah. Everybody who takes my classes gets unlimited retakes forever and ever. You get a redacted manual. Most places these days do not give out manuals. They give me out manuals that are redacted, meaning there's blank spots all over it you have to fill in, which makes it a great worksheet. You get access to me to review trading plans and your trades, and I'm here to help you guys. So I'm not going to ignore you. I'm going to be there for the students as fast as I can, usually 24 to 48 hours to get back to you with chart questions and trading plans and what else and everything else. The classes are priced very reasonably. They're $12.50 a class. They're supposed to be $1,500 a class. I started them at $12.50 for the first 6 months, and all 3 are $3,000. If you think that you might qualify for something else, if you're with me way back when or in the room with me, somebody else talked me into another program, but email me if you think you deserve a discount for something else, okay? Yeah, okay. Email me, Colonel. It doesn't sound like, I'll see what I can do. It doesn't sound like though you took my stuff. It's got to be, you had to take it from me because I taught stuff a lot different than other people did. And again, understand, I'm not trying to suck money out of you, but I want you to learn what I teach. And if you didn't take what I taught, then you didn't, you know what I mean? Then you didn't get it. So, but especially, let me know if you did the TPM with me. If you did it with me, that would qualify for one of the classes, but the rest of it's not going to qualify. Yeah. Boy, why did you try to avoid me, huh? But let me know. I'll see. I try and work out stuff with people, but I do want you to, have me teach this stuff to you. Okay. So, is there any other questions, guys? Let me know. For those of you that are free during the day, I really encourage you to get in the trading room with me during the day. This is just, here's the market letter. You guys have all had a trial of the market letter, so you know what it is. If you like it, great. If you don't like it, then you don't need it, great. There's the 3 class. There's a little summary of this is stuff that I offer. So okay. I'm kind of kidding you, Colonel. But so anybody who's interested, email me. Let me know. There's a schedule. The schedule. Go to my website. It's a very simple website, very clean. On the left-hand side, there's a schedule. It's called calendar, and the seminar schedule is in there 3 months ahead of time. Okay. Oh, a couple other things if you're still listening. The schedules are 3 months ahead of time. I do not ever going to have a sale. I don't pressure you to take something. I don't want you to take if you're not ready. Okay, there is no sale ever. The price is what it is. There's no sale. If you took them before with me, I have a retake program, great. But there's not going to be a sale in the future. You're never going to get a better price. You're never going to get a worse price. Well, you may get a worse price. I'm going to raise price in 6 months. But the point is that I don't want you to feel pressure to take them. You're never going to get that pressure. When you're ready, when you're ready to take them, you'll pay 3 times the price. And if you're not ready, you're not going to take it for free. So when you're ready, you take it. And when the day comes you're ready, you'll know it. Because either you know it or you get sick of screwing up. Warrior. Yeah, I knew your name, Warrior. I couldn't put them together till you typed it. If you gave me multiple choice, I would have lined you up with Warrior, but I couldn't at the moment think of it. How you doing, Warrior? Yes, BC. Not only I talk about them, there's a watch list every day for swing trades. There are swing trade suggestions, and I'm going to be more active in them. I wasn't up until last week because I was kind of, you know, full in the long-term basket. But I told people I'm dumping and going to be just kind of swing trading my way through the rest of the bull market, like I did with Adobe. That's what I do. I either gap or intraday into swing trades, but there's also discussion all the time about swing trades. Keep in mind though, BC, one of the problems that the people who want to swing trade is that there's a limited amount about how much you can talk about swing trades, right? The daily chart doesn't change all day, really, that much. So, the intraday charts are changing all the time. So most of the talk gets devoted to intraday trades, of course. But yeah, we talk about swing trades. I like them. They're good things, and they should be part of your arsenal. Okay. Classes and sequence. Great question, BC. The gap class can be taken anytime. I consider that to be an independent study. It naturally would help greatly to have the other classes because that extra technical skill helps you. But I think classes or gaps are somewhat in a vacuum. The second class has the first class as an absolute prerequisite as the first class. So you can start with the gap class if you want. If you're taking them all, I would take them in the order that they're offered, which is class 1, class 2, class 3, which is, mastering technical analysis, mastering advanced tactics, and then mastering gaps. I do them it's every 6 weeks. I do them 3 Saturdays in a row. Boom, boom, boom. So if you want to take them right in a row, boom, 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 and then you take 3 weeks off. I'm also going to have the Friday a week before classes start. I'm going to have a review session class Friday afternoon for about 2 to 3 hours for everybody who wants to attend, who's taken the seminars, to have a practical application and review of the seminars. You can really learn them better, kind of warm up into people who are taking the retakes for the next time. And I'm going to get this a little better on the website because there's so much information about them and it's a little disjointed on the website, so I want to clean that up this next week and have it a little bit better. Okay? Can you go back to the calls back there? What's that, Tony? Can I go back to the 2000 and 2000 calls back then? What do you mean? Can I go back to those calls? I'm confused. Can you explain what your focus? Yes, the focus BC is making money on an intraday and a swing basis. It's a day trading room that also focuses on swing trades. Both every morning. Here, you know what? I have a slide here for you. Every morning you are. I'll leave that last slide up for you, but every morning I go through 1,100 stocks at night on the daily chart, BC, and I pull out and I also go through 101 hourly charts, and I go through and pull out the ones that are best for longer term trading. Use those for 2 purposes. They can be used for swing trading. They can also be used as a catalyst for good intraday trades. So we do everything. We talk about swing trades, we talk about intraday trades, we talk about gaps, and whatever's appropriate. I usually do between 2 and 4 trades a day. The room is basically open from 8 to 12. Now it stays open all day. I'm on the mic till 12, and after that, you may call it kind of shut down. I basically have a position or 2 open, or I may enter something else, but it's typing only after that point. I may be, gone for a period of time. I do not believe in sitting there from 12 to 4, staring at charts that are doing nothing, wasting time. I think you guys should consider yourself to be, if you're trading successfully, I think you should gear yourself to work a 4 or 5 hour day and be done. Not to be putting in 14 hours a day unless you're making money all 14 hours of that time. Okay? Does that help answer some of your questions? How you made top and bottom? Oh, Tony. Yeah, God. Yeah, I can. I'm not going to do it right now because I don't even have my live charts up. But that might be a good. When can we do that, Tony? I'd like to do that because you wouldn't even believe me, but the 2001 call, if I can still get the charts from back then, I made to the hour, not just the day, but to the hour. I'm not kidding you. 2008 was to the week. I don't recommend day trading platforms, BC, because the platforms are tied to brokers. They're interrelated. Some brokers use certain platforms. Some platforms you have to use certain brokers. And I don't get into that because what I do and what I use in some cases goes back years. It depends on what you want to do. It depends on what your goals are. Are you taking a lot of shares, a little shares? Do you want per share trading? Do you want all or nothing type pricing for your trading? As much as you want of share size. Are you shorting a lot? You got to be careful what broker you use in terms of getting your shorts. I suggest you just do your research. I don't like to give recs specifically on companies at the moment. Okay, so just do your research and ask around. There's a lot of information out there. People will be glad to chime in because what I use may not make sense for you. Do you use an app to screen market for positions you see? Oh, a scanner? Yeah, I use a scanner, Maddie C. I'm actually using a scanner that's in development, so it's not. I don't want to say what it is even at the moment. I was working with somebody on developing it, so I'm kind of using it. When it goes um, public, I'll let you know because I was helping do some of the stuff for it. But but again, there's a lot of in the meantime, there's scanners out there. I like using a scanner. I've used a scanner of some form or another since my first day trading almost. I think it makes sense. Hey, thanks, Marty. BC, I actually have different platforms I use because I have different accounts at different places. Um, for my work, I'll tell you this because what you see when you log in my room, for my work, for my charts, I'm using TradeStation right now. Um, but if you want like great charting, TradeStation, Realtek I used for years and years and years. I went away from Realtek because I didn't like the brokers that ended up being associated with it. Um, TradeStation are great charts, and there's also eSignal has nice charts. eSignal is its own broker, so you got to like the brokers if you use eSignal. Um, I've never used Thinkorswim, but I had a lot of people say they like that a lot. I've got nothing but good things on Thinkorswim. Okay. My email again. If you go to the website, you can go to the website, but it's simply Paul at disciplinedtradingstrategies.com. I'll type it in there for you. Let me give you a couple things there, but yeah, because the first time you go to the website, it's a pain because it's a long website name, but after that, it's easy because it'll Google will pull it up for you automatically. So there's the website, and here's my email. Okay. There's her other information, and somebody asking about the room. I'll just chime in as long as you're here listening. Um, I run the room like I run the room like I'm talking right now. I don't know what rooms you've been in, or some of them get a bad rep. This is There used to be a joke that people would type to me all the time. They'd be talking about some room and they'd say, "Oh, those people in that room just got out of the trade before the room knew what the trade was even." I'm not a hyper scalper. I like to take trades that I may try and hit a first target in 10 minutes, but generally the stuff I'm getting into, I like to try and hold for a couple hours, for all day, for a half day, some stuff swing. And I'm not this hyper spastic person. I'm just calmly going over stuff. Everything that we do, 95% of what I trade has been discussed in the morning pre-market, into the market. Occasionally something comes up that somebody finds, but even then it's usually not spur of the moment. I mean, a couple of times maybe in 6, 7, 8 weeks. But it's just going over in a very sensible way the plays, the concepts, and people benefit from three ways. I mean, there's stuff that what I do, I'm putting out there well ahead of time for you. So if you want to, you can join along. A lot of people just like hearing my comments. Like they like to, because I'm only doing 2 or 3, 4 things, but I may have another dozen comments of things to say. Hey, I would do that if I wanted another play right now, or I would do that, but this. And people sometimes take those and run with them, and they'll say, "Hey, Paul, thanks for that comment I just made." Blah blah blah. And then some people just like they're more independent. They'll take the watch lists and some of the commentary and just run with their own stuff. So it's whatever level you want to be at. Yeah, absolutely, BC. Yes, I give the entry, stop, manage it along the way for you. The whole thing, everything's out there ahead of time as much as it can possibly be. Sometimes, if I have the choice between missing the trade and getting it in type, I'll tell you I'm typing it, but here's the play, and I'm so clear. You would never, nobody's ever questioned, what I've said. Generally, it's in type before it happens, but sometimes it can't be. It happens a second afterwards or a couple of seconds afterwards. What do you think about level two, Paul? More specific? Newsletter included? No, the newsletters. Everything's a la carte, but they're cheaply priced. I mean, the letter is half price if you're in the room. So the letter's half price if you're in the room. The room's 147 right now. I have the room on a tier structure where if we get, I want to keep the room under 100 people, not by cutting people off there would be a price increase at 50 and a price increase at 75. So just little ones just to kind of tailor it off if we start getting up there a little bit, and considering the fact that I not really advertise much and how we start off, and the room's I think growing very nice. I'm more worried about it getting too big in 6 months, but they'll be okay. It'll take care of itself. What do you think about level two? Do you use level two? Well, you use level two for sometimes little last minute entering concepts, if you're really finessing something. You do not use level two to determine whether or not stocks are going higher or lower. The inside bids and offers on level two are real, but keep in mind there are invisible bids and offers on level two called dark pools. Keep in mind that outside the inside bid and offer, most that you see is fake. Usually if there's more bids lining up than offers, if you look all the way up and down the line, it's usually not real. They'll disappear when it comes down to it. So you can get by with never looking at level two, and if you're more of a micro trader, you can get a good concept whether or not you should take an entry based on if the bids are piling up on the inside bid to some extent. But don't ever try to think you're going to understand the bigger term direction of where things are going by looking at some total. Most stocks that are moving up with one person staying on the offer for 100 shares. You ever notice that? The bullish stocks are often moving up with one person consistently there with 100 shares showing. Everyone else coming and going. On the other side, there's 6 people that are always there, but they're 1 or 2 levels away from the inside. So it's a smoke and mirrors thing. I talk about that. Yeah. Well, I think, I don't know because I've never been a market maker, but I assume they probably have computer programs that automatically will remove their orders when they get too close to being inside. Maybe somebody who's a market maker could tell me if they have that as part of a level 3 system, but I assume it's automated these days, Carmen. So I'm buying 5,000. If the inside bids at 22.25, they show themselves buying 5,000 at 22.20, but then if it gets down to 23 or 22, that disappears. So it's just kind of a fake. And I assume it's automated these days. I really don't know. I just know that you're not going to learn much looking outside of the inside. Outside of the inside, if that makes sense, of the bid and offers. Okay? Thoughts about VWAP. It's not a very popular indicator. That's volume weighted average price, Colonel. And it's like any other indicator to me. You know what? Before I answer that, Colonel, let me give you 2 great movie recommendations to see. Here's the quiz for you poor souls that are still listening to me at 7 o'clock. What 2 movies am I going to recommend to you? You will never guess them because I don't think I've ever asked this question. Take a guess. What 2 movies do I recommend you see? And Colonel, this is part in answering your question. What 2 movies? Anybody want to take a guess? I guarantee your first guess is going to be wrong. What 2 movies do I think you should see? And I'm even a little fuzzy on the name of the movies at this point. Happy, you're amazing. Yes, 21. That's the blackjack one, right? 21. 21. That's it used to be called Taking Down the House, right? It was the book Taking Down the House. Is that the right movie? Taking Down the House, called 21, right? See the movie 21, everybody. Okay? And you know what? When you see it, watch the whole movie, and then there's only 1 minute of the movie you need to go find on the internet and replay it yourself every morning. And Happy, you know what movie that is, right? You know what minute that is, right? It's that 1 minute where he screws up, right? Because that look on his face is what every trader has sometime in their career. And the sooner you recognize that look, and the sooner you recognize how stupid you are, that will help you immensely. That is the greatest movie you could ever watch, just for that 1 minute, right? You agree with me, Happy? Wall Street, all other crap, that's just fantasy land. Don't care. 21's a great movie. The other movie is, amazingly, I think it's called 22. What's the Jim Carrey movie about twos? I don't know the name of it. The Jim Carrey movie, and it's about twos. 23. Yeah, he gets obsessed with the combination of 23 or something like that. And the reason I think that's a great movie to watch is because, to me, it has a lot to do with indicators. It's a self-fulfilling process. If you think something is going to happen, you will find instances where it will happen, and you will convince yourself to believe it's true. And that is your VWAP answer. I'm okay with any indicator you want to throw on your chart, Colonel, if it's one indicator, and if it is used as a guide to help keep you out of a trade. Okay? But there is no magic in any indicator that can tell you when to get in. There is no computer, anything that's going to tell you when to get. The only computer things that work are things that are manipulating the market to some extent, and you need multi-million-dollar computers to do that. So none of these things are gonna give you great entry signals. Volume weighted average price, it just is not magic. It just simply is. If you include the volume and all the trades, where does the average come out to be? It's still a big who cares. If you're playing patterns that are based on shock value, based on strong things happening that are going to have prices moving, it's not going to be a relevant thing, you know. But again, if you get familiar with some indicator and you feel it helps tell you to stay out of a stock, for example, on pullbacks, you want to see the stochastic get under 20, you want to see CCI get under 10, whatever it is. If there's something that says, okay, I'm not taking this trade because the XYZ line didn't cross the ABC line, fine. But don't take a trade because XYZ crossed ABC, okay? Why did I buy his crystal ball? All right. Anything else, guys? Got any questions? Feel free to email me. You got my email up above there. You know, and again, if you signed up, well, all of you had a trial of the letter. If you signed up new this last week, you're getting a trial of the letter. If you had one but you want it again, you have to email me personally and just say, that's fine, I'll give you one, no problem. Just tell me you want another one. You won't get it by signing up because if you're a repeat, you'll be taken off the list automatically. So you have to just email me and say, hey, Paul, give me another trial because I, didn't see it. My mother died, my dog ate my homework, whatever it was, and you'll get another trial. For the room, you have to go and you have to sign up and read about the room trial. That's a little more difficult. Unless you email me and I know you and you're really nice, maybe I'll get you in. But what good intraday trading books do you? Oh man, Matt, that's a good one. That's something I should put on my website. But you know what, Matt? Here's my problem. I haven't read a trading book in 10 years. So I would recommend all the classics that some of you may not even read. I don't know what the current, I don't know what the current good stuff is. I still think some of the oldies are some of the goodies. Now, here's one I'll tell you that I think that my number one book always, even when I was with Pristine, my real number one favorite is Van Tharp, the Van Tharp book, Trading Your Way to Financial Freedom. That to me is number one. And yeah, I gotta love Greg's book, Tools and Tactics. Anybody know why? Anybody know why I love Greg's book, Tools and Tactics? Well, you have to figure it out yourself. Some of you have read it, maybe no. Well, you know what, Van Tharp, yeah, anything Van Tharp's good, but you know what, the first book to me was everything. I mean, after that, the first book to me, Cliff, is 90% of everything. And after that, you get into kind of like, okay, nice stuff. You got to read that first book of Van Tharp before you trade. You just need to. That's all, to me. And then yeah, the Tools and Tactics, great book. And then you need to read more about the psychological stuff, guys. Listen to this real quick, Matt. You're not going to learn technical analysis from a book. What you need to learn from the books is the psychological aspect of it. And for that, there's the Mark Douglas book. I still have them here. I can turn around and look. What's the Douglas book? Well, I like there's a guy called Kiev that people don't know. Trading to Win was an excellent book. There's What is Douglas? Some of you are probably typing. I'm not looking at the screen right now, but what is Douglas's book? Um, all the titles are so similar. Oh, Bell did one, The Day Trader's Advantage. Is this it here? I can't read it. It's probably the one because it's worn out. No, let's see, Electronic Day Trader. Well, hopefully somebody typed it there. I'm not. What's it called? Yeah, Kiev. Oh, Mark Douglas. Trading in the Zone. Yeah, God, thanks. How could I not know that? Trading in the Zone. And The Disciplined Trader. Yeah, those are right there. You got them all. Those are my favorites. But they go back a ways. But they're more, and to the extent that any of them talk about strategies, I would just ignore that. Even um, even the book Trading Away Financial Freedom gets into strategy a little bit, and ignore that part of it. It's not all that relevant. It's very simplistic. It's a psychological stuff you have to get down. Um, there's something about being able to make more money in a couple hours than you used to all week that really plays with people and gets you on the wrong side of thinking properly. 100%. 100% of the time. Oh, really? I didn't know Douglas passed away. Huh. Yeah, I heard the Day Trading Coach. A lot of people liked it. Never read that. Yeah, thanks, Cliff. Good. Okay. All right, guys. Are we done? I think we're done. So have a great evening. Tomorrow's Friday. I'll see some of you in the room tomorrow, or some of you going to join us in a trial next week or whatever. I'll see you next week. And otherwise, maybe some of you I'll be talking to by email. So have a great rest of the evening. All right. Take care, guys.